my investy besties, welcome back to Mommy Trader. So on today's video, I just have a quick one for you, but I just wanted to go over our June investing plan. So I like putting these types of spreadsheets together just to give my husband and myself a quick snapshot into what we plan on doing in terms of contributing to our investments each month. Sometimes we may have to make adjustments to our investment strategy. Sometimes we want to maybe try a new book or research a new company or different things like that. And this is a great spreadsheet that we like to just refer to. Now, you all know I love my spreadsheets, and I feel like spreadsheets has been so vital to our journey because it allows us to kind of see things in a very easy and cohesive way in terms of numbers and just being able to track how we're doing over, month over month and over the long term. And so as you can see, we have for the month of June, we plan on pre-tax anyway, putting $2,636.70 into our pre-taxable accounts. Now, there's a couple of things here. So in our 401k, we decided to wait until about August to change our adjustments again, because I mentioned in the video right before this, which I will link up in the eye in the sky, that was our budget video for June, but my husband got another bonus, and so we're trying to make sure that we don't over contribute to our 401k. Now, this is a great problem to have, but it can be a little, hassle in terms of readjusting the contributions. And that's another thing, especially if you get your bonuses or any extra monies towards the beginning of the year and you elect to put money into your retirement, that all still counts towards, the threshold that the IRS has set, which is $19,500. And so we're trying to make sure that we come as close to that as possible. And so when we did our spreadsheet, we figured doing it in August and just being able to make, 7 more, because we get paid twice a month, 7 more contributions to the 401k, being able to break it down evenly, because we can only change our adjustment to our 401k by 1%, so 1%. So we're trying to come as close as possible to the 19,500 without going over. But like I said, it's a good problem to have, and we're just still working with those numbers. We just want to at least make sure we contribute up to the match, because that's free money. So I'll keep you guys updated about that as well. But yes, that's just what's going on over here. So as you can see, we have our match for the month of June at $749.70. That's just free money for investing. That's what I tell people. Like, if you can invest up until the match that your company will contribute, they're giving you free money just by investing in your future. I mean, it really is a win-win. Not to mention that your taxable income rate is lower because the government doesn't take taxes out of money you send to your retirement, which is a great thing. Next is our HSA. If you guys don't know nothing about HSA, this is like one of the secret sauces of financial independence. I talk about a health savings account all the time on this channel, but basically you contribute to your HSA account pre-tax, so that's tax-free. The money grows tax-free, and then when you withdraw that money and use it on medical expenses, that money is tax-free as well. And then if you use the loophole, which is basically any medical expenses you can afford to pay out of pocket yourself, save your receipts, upload them to the cloud or to a spreadsheet, take a picture of it, log it in your computer somewhere, and then in the future, because the IRS doesn't have a limit on reimbursements back to yourself, you can take those reimbursements back 10, 15, 20 years down the line. Let's hope they don't change that, but it doesn't look like they're going to, and it's a loophole that many wealthy people take, and it's something that has been getting out there to the masses, to us regular folks, so that we can take advantage of that loophole as well. So as you can see, like I said, pre-tax $2,636.70. Moving on to post-tax, these are all taxable brokerage accounts that we are using to be able to retire early, have money to withdraw from when we reach our early retirement age in 9 years at 45 years old. So we plan on putting $1,000 into our Robinhood account. Like I mentioned, some of this extra money is from the bonus that we received. So again, that's why these numbers are a little higher, but we're trying to make sure that we have a job for every dollar that's coming in. So $1,000 into our Robinhood account, that's the plan. We plan on putting $200 into our Webull account. That's where we keep our penny stocks and spec stocks, starter company type of stocks there. $1,000 into our Interactive Brokers account. That's where we keep our growth stocks. That's your Teslas, Microsofts, Apples, things like that. We plan on putting $600 into our kiddies account. We plan on putting $50. Now, we don't know what this is going to be until, the week. And this is the Investing Savings Challenge, what I talk about often. I do post updates of that over on my Instagram. So make sure you follow me over there. I post over there in the stories. But basically, I take 4 expenses. I come under budget in those 4 expenses for the week. And then whatever I save, invest. It's really easy for those of you who can't, get extra income, or if your current income is tied down into like paying off debt or making sure you build your emergency fund. Well, this is a great way to start investing, is through your expenses. Next is our backdoor Roth. We should have this fully funded, I would say, sometime in August, and I'll post a video about that. But we're going to basically save this money in a sinking fund, then do just one transfer of the $6,000 into a traditional IRA, wait a week, and then transfer that traditional IRA into a backdoor Roth IRA. And so, like I said, I'll have a video about that, so stay tuned. Cryptocurrency, plan on putting $800 into that. Thinking of getting like some Cardano, some Stellar, some of the other smaller ones that, have a really solid future. We don't invest in meme type of crypto. And like I said, you should always do your research when you are investing into anything. Don't ever, ever, ever follow anybody that, is just throwing things out there and not showing you what they're doing. Why? Because you know what happens? You'll end up holding the bag. And a lot of people got burnt with the whole Dogecoin fall. Now, if you got in early and you were able to put money in that you didn't need, don't invest with bill money. Do not invest your emergency fund, because that's specifically for something else. But again, if you want to play around with it, you can do whatever you like. It's your money. But again, I'm just trying to put that warning out there, because I've seen a lot of people lose money in Dogecoin. And again, it's just, like I said, just do your own due diligence, research. And next up, and if you want to know more about cryptocurrency and what it is, I will link a video up in the eye in the sky where I made a cryptocurrency 101 type of video, because you should understand what it does and what its functionality is before you invest in anything. And then other is $805.30. And that's just like our third rental fund. So we can get started on our third rental property, so we can continue to build up our assets. So our total post-tax investing is going to be $4,555.30 for a grand total for the month of June of $7,192. And so if you come over here to this little column right here, I have some changes or notes. I like to put things here so that we can kind of have a reminder to look into these things throughout the month. So the first thing is to read a financial book. I really love reading financial books and audiobooks, because I like to continue to educate myself on investing, and not just investing, but building wealth and financial freedom and financial independence. And so reading is a great way to build your knowledge and understanding of this journey that we're all on, right? Next is to study more options. My friend Rebecca over at her channel, I'll link it up in the eye in the sky, just started her first video on options. I know Dave over at Hidden Freedom Investing talks about options, and options is one of those things that I've really been trying to learn more and more about. And so that's something that I plan on, would like to learn more about in the month of June. It's a great way to kind of, accelerate your goals faster. But again, guys, options is like, it can be really intense. So again, just start slow and small. Again, I'm not a financial advisor, but again, it's something that, my husband and myself, plan on doing. Next is to continue to add to our growth stocks, not really add any more to our interactive brokers portfolio, but just add more positions to our current shares like Microsoft and Amazon and Tesla and, Dollar Tree and Target and different things like that. We will also like to add Pepsi and P&G to our dividend portfolio. So if you don't know, we are tracking, or we are building our dividend portfolio over in Robinhood, which if you are interested in Robinhood, I have several videos about Robinhood. You can go back and take a look, and I have a referral link in the description box if you're interested in opening up an account with them. But we are planning on adding Pepsi and P&G in the month of June to that dividend portfolio. Next is we want to look into new ETF. Now, this is something Dave had talked about, and I know a couple of people have been talking more about this dividend ETF. And so I'm going to do some more research about it, because, if it proves to be something great, especially because AT&T, which is one of the dividend stocks that I really, really loved, is cutting their dividend. When you are investing, it's about business. And if a company cuts or, pause their dividends or suspend their dividends, then that means that I need to call pause, cut, and suspend my investments into that company until I get more information. So as far as AT&T, I'm on like standby with that. But just continuing to research other companies that are paying dividends, solid dividends, good companies, because you don't want to just invest in anything because they are paying a dividend. And then finally, research more SPAC companies. Try to find more companies that are trying to get off the ground, that have good products and services, because your Teslas was once a startup company. Amazon was once a startup company. Apple was once a startup company. And if we can get on the ground level in those companies while they're really, really inexpensive, and we can see that they have a good, solid future, then, child, it's off to the races with us. And, so that's what we're going to continue to research and just don't stay on top of. So that's pretty much our plan for the month of June. As you can see, we have our little, I'm moving my face over. We can see our allocations for the month of June here. Just another visual, because you guys know I love my visuals. And so that's pretty much the video. So if you guys have any questions or comments, leave them down below. I'll be sure to get back to you. I love talking with you guys. Don't forget to like the video and subscribe to the channel if you haven't already. And don't forget to share this content with a friend so that we can get more people on board, so that we all can kind of build generational wealth for our children or just our families, and be able to, do the things that we want to do in our life. So again, guys, thank you so much for watching. And until next time, I'll see you in the next one. Bye, guys.